Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP500 view using the Emini futures contract and put together a plan for the trading week ahead, looking at some high probability action areas and identifying high probability price targets. So last week we closed up 0.6%, new all-time highs across the major US indices. Heading into this week, we are now in one time framing up on both on the daily. The weekly was in balance this morning when I provided the London update, but we've just taken out the 63.53 to the upside. So we're one time framing up now on the weekly as well as the monthly. So the trend certainly remains to the upside. In terms of the VWAPs on the daily, again, that was bearish this morning, but we've since taken out the 63.15, and so we've now got bullish momentum on the 5-period look back on the daily time frame, and we have bullish momentum on the weekly at 62.93. So as we start this week, I'm using the 6300 to 6280 area as the bull bear zone and line in the sand. In terms of range potential, we still have or could see about 130 plus points of range in July heading into the last half of the month. So it's reasonable to think we have about 125 to 150 points of range to go. In terms of the data side of things, nothing on the calendar today. Obviously, we have tariff headlines, which is a non-stop event at the moment, but the market seems to be digesting those with more and more ease. On Tuesday, before the open, we will hear from Fed Chair Powell, but we should notice that the Fed members are in a blackout period at the moment ahead of their meetings, so it's unlikely that he's going to make any comments about the economy or interest rates. He's providing some, I think it's opening remarks, and so there's no Q&A, so I don't think we're going to get anything market moving from Powell. Then into Wednesday, we get existing home sales and important earnings releases from Tesla and Google. Videos to follow tomorrow on my views on the earnings and trade setups post the earnings release. And so it's likely that we are going to see a continuing expansion to the upside. Certainly, if the Tesla and Google earnings come in line or beat expectations, that should provide further fuel for upside extension. Then heading into Thursday, we get initial jobless claims, S&P Global PMIs, and new home sales, and we round out the week with durable goods data. So that's where we are in terms of the market moving events for the week ahead. Looking under the hood, we are still in a long gamma environment as we start the week, and so that implies that calls are getting rolled out and up in terms of price activity. Realized volatility is being led by the trailing quarter, and a long gamma environment implies buy the dips and sell the rips. More about that shortly in terms of the technical picture. In terms of the market breadth, 20-day moving average last week finished at 58%. So that was slightly down from the 68% the week before. Stocks over their 50-day moving average finished at 65 versus 67% the week before. And stocks over their 200 moving average, 200-day moving average, 58% versus 60. So you can see that we're losing a little bit of momentum in terms of market breadth. And so that's something to be cognizant of as the index, the broader index itself, continues to be making new highs. And so we're getting a little bit of divergence. So we want to keep an eye on that as we trade higher here. Into the open, we're trading 63.68 at the moment, and so we want to keep an eye on those market breadth indicators as a potential warning sign for a pullback maybe later into the back end of this month. So in terms of the technicals, we're looking at weekly range resistance of 64.10 and weekly range support comes in at 62.60. But for me, the initial area of interest is going to be any pullbacks into that 6300, 6280 area will be an entry point for the upside objectives on the weekly time frame being that 64.10. If we move to the intraday charts, and you can see a little bit clearer here. So I've marked out the, the 64.10 as the first area where I will be looking at potential fade to the short side. So any move up into that area, we have daily projected range resistance coming in just ahead of the 6400. So I would use that zone to watch for bearish reversal patterns to initially engage on the short side, looking for a pullback back into these prior highs here at the 6340s. As from that area, if we get bullish reversal patterns, then we're going to be looking for this move up into the 6440, 6460 area, and then again from that zone, certainly bearing in mind the market breadth divergence that we're currently seeing, I'd be using any move into here with bearish reversal patterns to again re-engage on the short side, and from there I'd actually look for a deeper pullback to take a look at the weekly bull bear zone 6300 to 6280 and see what sort of activity we get there in terms of buyers stepping back into the market. The downside scenario, which is certainly secondary to my mind at this stage, would be that we trade up into this zone at the 6400, 6410, and profit taking kicks in, given the market breadth divergence that could extend to the downside. And certainly if we get any negative tariff headlines or either Tesla or Alphabet disappoint in terms of the earnings, then the principal downside objective is going to be 62.60. But again, even if we test into that area, I'd still be looking at bullish reversal patterns from that zone to re-engage on the long side, looking for those same upside targets heading into the back end of the week. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.